India is definitely less dependent on what happens to global growth versus other economies, but it is dependent, and there is a clear impact on local Indian economy. So this print in that sense is reassuring, but I'd also like to qualify it by saying that it's still early days of impact felt through what's happening around the tariff uncertainty on global growth, including U.S. growth. So it's still early days, but this print is definitely reassuring.
Gautam, I like your choice of words there. Early days in terms of the overall impact from trade and trade deals, and you can apply that expression to inflation expectations, I would imagine, as well, because, yes, they appear to be relatively well anchored. The story within the services sector PMI seems to be telling us otherwise. Where are you putting inflation and the outlook, which is really one of the drivers and one of the positive catalysts for the macro markets in India? And where then does it leave your expectations for the RBI?
Sure. So look, global inflation, it's a tough one to call, but from a local economy perspective, I think inflation has been on a downward trajectory. We are expecting further rate cuts. The debate is how quick and how deep RBI goes, because the inflation prints locally in India have created room for further rate cuts. And the outlook, even from the near term, the next couple of quarters on inflation, given the outlook on monsoons and agri-inflation, that should also be quite accommodating for the inflation trajectory going ahead. So we remain sanguine. We think there is room for more rate cuts, and there is room for positive surprise also there.
Gautam, how closely do you think, in aggregate, the RBI is watching this robust services sector print, which seems to be really flying in the face of the external challenges, especially when you look at the export demand side of the equation? And secondly, how closely do you think they are watching what happened on Friday with Q4 GDP surpassing expectations at 7.4%? Is that going to move the needle in any way, or derail expectations of a further easing bias?
Unlikely, because it's still very early part of growth recovery. India did see growth slow down last year and early part of this year, also impacted by the policy stance. Now, the growth prints now and looking ahead, it's too early for RBI to worry about that. Again, if you look at the GDP forecast out there, 6.4 is our forecast for fiscal year March 26. The street is somewhere around that. I don't think that's a print where RBI would worry about growth being too high, too early for that. In fact, if you look at other parameters like credit growth, that's still not picked up. We had a couple 2-3 years of high double-digit credit growth, and that's when RBI really stepped in after that. So it's too early. I think there is enough room for RBI to surprise positively.
What are investor flows and positioning telling us about sentiment towards India amongst foreign and domestic investors?
So look, the local retail flows remain robust and almost like a systematic monthly inflows plan that supports a lot of robustness to the flows outlook for local investors in India. I think that thing remains sticky the way they are. And we have seen various periods of turbulence, 3 big periods of market drawdowns over the last decade or so. And even the last few months, we have seen uncertainty, but they have held up. The global investors, we had our Asia Investment Conference also last week. And the sense we get from investors is, look, a couple of years back, global investors would think India is a good market long term, but it's too expensive. And then we saw a correction late last year, early this year. And I think despite the market coming back, I think they're much more, if I can use the word, reconciled with the elevated valuations than they were, say, a year or 2 years back. They still find valuations rich, but they're now, unlike a year or 2 years back, willing to take at stock or sector level bets. So that's a change which we have seen, and we have seen that in terms of the actual activity also. They have deployed capital in the last few months, selectively, but they have. And I think that will continue.
But isn't such a premium on the Indian market well-deserved, Gautam? Because the perceptions are that India remains resilient in the face of tariffs. We have potentially an emerging US-India trade deal, strong domestic growth prospects, plus inflation, as we discussed, remains well anchored. Does that underlying picture remain to work in favour of a Buy India strategy? And as I said, isn't that valuation justified, therefore?
So look, the risk-reward, keeping in mind that valuation and other parameters we discussed, is obviously not as attractive as it was 6 months back. But yes, we still are recommending our investors that you should buy the dip. There's still a long-term attractive market, specifically given that even during the down cycle and early stage of growth, there remains room for earnings growth to pick up versus what we have been seeing. And again, at an early stage of the cycle, and I would call this a cycle, you won't see broad-based earnings growth where every sector delivers, but you'll start seeing pockets of growth picking up. Like we're already seeing early signs of stress from NPLs in the financial services easing a bit, not completely, but easing a bit.
Yes.
Not yet enough signs of trade growth picking up, but early appetite we're picking up from the market. So again, keeping that in mind, there will be enough appetite from investors to buy the dip.
Thank you for that, Gautam. And could you elaborate, perhaps, and give us a bit more colour on the challenges, on the speed bumps, what could go wrong with such a constructive backdrop? Because there are perceptions that reform momentum has slowed. Private sector capex isn't really coming to the party at this stage. There are mixed signals over trade deals, a flare-up of the India-Pakistan conflict. We saw that. Yes, it has settled somewhat. And then, of course, there are the structural issues like youth unemployment. Is any of that derailing, in your opinion, or going to derail such a constructive view on India?
So a lot of these issues have been around 5 years back also, or even 10 years back, or 3 years back, and now. So can any of these derail structurally growth? I think unlikely. Can it have some marginal impact on growth rates? Possibly. And we have seen that, economists used to speak about India's potential growth of 7.5%. Now they're talking about 6.5%. But 6.5% is still an attractive absolute and relative growth rate. I think what derails or what is a risk to Indian economy and markets is more the global macro. If there's a global slowdown because of tariffs, etc., that will hurt India. So that's a risk. The entire trade deals, etc., the way we look at it, the risk reward is actually positive. The downside from that is fairly limited. Upside difficult to quantify, but there remains potential upside if India gets its trade deal strategy right.
Fantastic, Gautam. And you preempted my next question. Let's get into that. If both India and the US, and you heard how optimistic Howard Lutnick seemed to be, if they are closing in on a multi-phase agreement, then could there be a deal as early as July, maybe even when that 90-day pause period runs out? Or is a deal by Diwali, mid to late October, a more realistic time frame?
Tough to say. Typically, these trade deals are negotiated over years rather than months. But there's been enough positive noise coming from both sides that an early deal is feasible. So India has been more talking about later in the year, while the US has been talking about June, July. So tough to say. I think it's quite possible we have some kind of an early deal to take care of the looming tariff deadlines. And then there could be some more details coming out later on.
Judging by President Trump's most recent remarks, and then, of course, this to and fro within the WTO that India has decided to initiate, it doesn't seem that, as I said, there are some mixed signals. And from the US standpoint, it seems that President Trump is not keen on Apple relocating more production and manufacturing towards India and away from China. How does that complicate matters, especially when the expectation is once these trade deals are concluded, it ought to supercharge FDI commitments? Should we be managing our expectations in that regard then, Gautam?
Yes and no. I don't think anyone is baking in terms of their economic growth of a big supply chain shift into India or Apple shifting half its production to India. No one is baking that in because that impact on economic growth would mean much higher forecast than what is out there. So versus what's baked in or expected, I don't think anyone is baking in a big supply chain shift. But just keep in mind, from a supply chain shift opportunity perspective, even a small supply chain shift can be meaningful for Indian growth and Indian economy. Not looking at, if China is manufacturing 100, a large part shifts here. Even a small shift here can be meaningful. And for a lot of these supply chain shifts, it's also about the local market opportunity, not just shifting here to export. So I think some supply chain shift is quite likely, but a big one or not, the jury's out.